Hey guys, Mike here. So, oh boy, what a big day on Friday. So we're going to look in the charts to set up this week. Of course, you might have noticed the big rally on Friday, so we'll go into what happened. I'll kind of break it down because I think some people were kind of confused about how the market reacted to it and stuff. And so we'll definitely break that down. Also, we'll go into why sell a man go away is basically totally bogus. And also, and I'm going to literally show you the chart to show you this. And also, watch out for one earnings in particular tomorrow as well. And see if it gets a big pop for the fourth time. But what happened Friday, you might have noticed, is we ended up getting PCE, and the month over month came in line. It met exactly what it's supposed to do, 0.3%, right? But it was the year over year that came in higher than expected, but the market could care less about that. And what it really showed was we are still spending, and so the market said, oh cool, came in line, we're good to go, let's go. After, of course, you had these huge earnings coming from Microsoft and Google as a combination to just push this thing up. And then this is the month over month. This is what the market really cared about. And as you can see, I mean, it's basically sideways. It's not like it's going, hugely down. The yearly is not really going down anymore. It was. And markets, really rallied, right? Really, really hard, especially once Google hung the moon. I mean, that was crazy reaction, right? Now, looking at the S&P real quick here, where are we at? In the S&P, and you'll see this is different on different charts, right? But in the S&P, in an upward channel, right, mitigated this entire fair value gap right in that area, all right? So the question is, are we going to bounce, start coming back down to the bottom of this channel, or continue to move up? Right above this, if we pull this up, what we're waiting for is what? A test of the 50 moving average. Let me get rid of the 200 and the 100 because we do not need them right now. But you can see the 50 moving average is basically going to be right in line with that channel, okay? And so that's what we're waiting for, to see if we get a retest and success, or do we actually get rejected, all right? So that's going to be key on the S&P right there for next week. When you also look, though, when we scoot over here to the IWM, I told you guys you can see an explosive move if data came in fine, yields dropped and all that good stuff because of all this, right? And it blew right through. You see that right? It blew through everything in pre-market at 8:30, but got strongly rejected down, came back through both trend lines, through the 100 and everything else, that little shaded area right there, right? And then it ended up pumping the rest of the day, right, to get up there, trying to fight its way back to that shaded area. So it's out of one trend line and closed above that. It's right there around that 100 moving average. And so it was a strong move up for IWM. And what you also see, you see some lower highs being set, okay? So that's kind of key. We still need a higher high coming up out of this. But for right now, everything's looking okay. Again, when you look at what's coming up above it, again, the chart's extremely, extremely damaged. But if yields continue to stay where they're at, then this can continue to move up. Now, the NASDAQ, as far as like the futures in Q here, we hadn't reached this area right here, which we should next week if we continue this pump up. And you're going to have a whole boatload of stuff happening here. But again, what do you see there? That's basically a channel, right? A short-term trending channel up right now. And it's not that far away. That's like a little bit over 1% away. So we'll see what happens when we get there next week. Because, and I'm showing you NQ just because NQ really is just, I mean, we're going to show ES too, but NQ just absolutely dominated things, right? Because of what's going on with Google and all these rest of these. And so, another percent and a half to move up in this area to see how the market's going to react off of that. Again, I'll be looking at the S&P to see how it reacts off the 50. If you pull up the ES, of course, and you see the area here, it's already reached that area. Again, it's still sitting in this channel right here, moving up. You got about another percent to get out of this area right here. And so we'll see how this is going to react. Are we going to reject off this channel, start coming down, grabbing liquidity in the middle, or maybe even the bottom? That's what we're going to have to find out, because the major earnings, remember, you're going to have major earnings next week, but you just went through a whole bunch, right? So a lot of the stocks reporting next week, which I'm going to show you, don't have any weighting at all, really, in the indexes. They're very small weights, but you do have a couple reporting next week, a couple of the big hitters. And before we move on to whether or not sell may go away is a real thing, which it's actually beginning to be not, please hit the thumbs up. Just helps people find the video. Really appreciate it. Think about subscribing if you like this kind of content as well. And when you look at this has always been a big debate, but I subscribe to Trader's Almanac and all kinds of different stuff for our members and stuff, and read through this stuff. And I'm just a firm believer looking at the charts. And the other thing I started thinking about was, because I've done videos for them just showing literally over the last 10 years, because I don't really care what happened in the 50s, the 60s, and 70s, right? I mean, this is just a different market. It's run by different things right now. And when you look, though, I was like, well, what happens, though, if you have a bad April, right? And how does that affect it? Because normally when you're down in a month, right, and if you start to turn, obviously that's going to help the numbers in May and June, all that stuff look pretty good, right? But you'll see here, and I just go back the previous 10 years. I don't include 2020 because that's when we injected $7 trillion and everything was closed down. So I don't want to look at that. But going back here, just starting really quickly, if you look in 2014, you can see, well, April was pretty rough actually. Okay, it's kind of looking like what we're doing now. All right, and then it kind of recovered up. But then you look at what happened in May and going. I think I go from May, and then we'll look what happens going up to August, I guess, or whatever. Let's go to August. All right, and it's a pretty good time. Right, everything looks pretty good there in 2014, so not bad at all. And there's going to be one key question you might be thinking, which I'll answer at the end of this. This isn't going to take long at all. But you can see here in 2015, wow, April was a good month, and then here comes May through August, and it's kind of like, not all that great. Just basically sideways and extremely volatile compared to 2014, as you can see right there. So again, we're just looking at the charts, the facts in front of us. Then we go to 2016. What ends up happening? Extremely volatile April, ends up basically flat is what we end up getting. And then, so how does that look for, May through August? Well, May through July is a mess. It's flat, it's volatile. Ends up total, May through June was rough as can be, but May through August end up about 5%. So, that's not bad for S&P at all. Remember, the S&P is only returning like 8% a year on average, right? Then you go over to 2017, and it's just a brutal start, right? It sounds familiar, right? And then you get this explosion at the end of the month to actually take it positive. And then you can clearly see, May was a rough month, but May through August total was really good. It's not a time you really would have been out of the market. It was just a major roller coaster. You can see right there. I mean, that was really good. And so, nice move up right there. All right, we move over to 2018. 2018 was a rough year. Remember, we had a crash at the end of it. But, there's April, and April's kind of like, flat, pretty much nothing, slightly green, whatever. And then all of a sudden, we go through May, we hit that one, right? It's supposed to sell in May and go away. But as you can see, again, it's a roller coaster. There's nothing straight up, but this thing just rockets. Well, it actually rockets all the way to the crash is what it does. And so again, where's the end of August here? And so boom, like 7% up right there. And so that's awesome. Remember, S&P only returns 8% a year. And then it actually kept going, right? Until it actually crashed from October to December, right? Then you go in 2019, okay? This one, the Fed right here started to do rate cuts, okay? So remember, 2018, they were raising rates. 2019, they started rate cuts in July. But again, April, May actually look pretty dang good, right? Or April does. May, disaster. But then you look at it, massive roller coaster. We come up again, we go down again. And so really overall, if you take it all the way through August, it was pretty rough, right? And so it was really rough. Nothing good going on there, right? Then there's 2020. I'm not going to include it because we injected $7 trillion and everything went up that had a pulse. Now you look at April of 2021, really good April, and guess what? You can just look in the chart. I don't have to measure it for you. That's a really good May through August, and it just kept going. I mean, that was a huge move up, and it kept pushing up all the way through December until it crashed us, right, in 2022. And so, yeah, would you want to be out of the market by then? No, not at all, right? Your stocks would have been up because remember, if the indexes are up 7%, at least the SPY, the stocks are up way more than that. And so again, you go over to 2022, we're in a crash. I don't have to measure anything, right? I mean, this is a mess. April, May, June, July. And so this is a mess because we're actually in a crash. And so not even going to look at that one. And then lastly, look at 2023, decent, not really much going on in April. I mean, kind of flat really. And then all of a sudden May through August, I mean, especially May through July, just explodes, right? So the summertime explodes, stocks just roaring. You're not supposed to be in the market this time because it's the worst time ever. But S&P ends up rocketing over 10% going through July. And then, of course, we started to go down, August, September, and October. Now, I'm talking about something in just a second. But again, we are in a presidential election year, okay? And you can see that's where we're at now. This right here is like the top Q1 like election years. And then there's all elections, right? And so is it supposed to be rough? Sure, but look in June. Look in June for all elections, whatever projection you're looking at, and they go up, right? Especially June through, end of September, somewhere in there. And so historically, that's what's been going on. If you want to look at it that way, I've showed you going back to 2014 what it looks like. And so really you have a 60-40 just on any year, whether or not it's going to be a really good May through like August. So again, do what you want with the data, but you can clearly see, at least going to 2014 forward. Now I know what you're saying, or maybe, but I thought about this when I was doing the research. Well, Mike, yeah, we're at high rates. Well, we were at higher, we were high rates or rates going up in 2018 as well, right? We were in high rates in 2023 and the market still went up. You know what I'm saying? So yeah, should the rates eventually at some point in time affect it? Yes, absolutely. But again, right now, as you can see, people are still working 3 jobs, and this data continues to hold up, and all this good stuff. So it's not the rates are. Now, what you need to watch out for. Forget the Fed funds rate. It's watching out for the yields. Right now, if the 10-year yield continues to march up and get to where 5% or above, that's going to create some major headwinds for the market, no doubt. And again, we're just waiting for the 50 retest. If we get the 50 retest and it fails and we continue to sell off, we kind of know, right, what we're looking at in May. I mean, I'm just saying. So again, we'll know. But I was curious about if April's really bad, is that just set up May to be good? That's what I was looking at. And so, a couple stocks here, especially one that for the earnings. NVDA obviously has tested this spot down here multiple times with success. So that is a demand area. It closed above its 50 moving average. It closed above one of those important areas I told you about, if we drew the lines here. So the next one, if this continues to try to push up, and they had a lot of call options just rolling in, again, it's kind of setting right outside this channel, like it's breaking out of this short-term channel. If that continues to happen, 892 is the next level I can look at, going to 910, somewhere in that area. Again, this moves dollar-wise a lot, as you saw. I mean, this thing was just pushing and pushing and pushing on Friday, and people are like, wow, is it ever going to stop? Probably not. So again, we'll see. And it doesn't report earnings for a while. And so, it's like the new Tesla, right? Tesla would just pump and pump. People are like, when's this thing going to stop? I asked the options market on that one. So Tesla. Now Tesla interesting because what's coming up? The 50 moving average is coming up, okay? Hadn't seen the 50 in quite a while, so it's going to be testing its 50 moving average as well. Normally you get a rejection off the first try, but we'll see. Maybe some news will come out. Maybe the option market will get involved and just drive it right on through. But again, it's been quite a while. You see where it was support there, then it was resistance. You see how it was coming up here, resistance, got sold off, broke above it, right? And so again, it tends to respect the 50, but it's pushing up. And that area we talked about around that 175, 176 area, that is resistance. Okay, until it pushes through farther, that is resistance. And so if we do reject off the 50, again, that area down there between 157, 160, that has showed support many times already, right, since this move up on earnings. And so anywhere from 160, 175 is your range currently on Tesla. Again, we'll watch for news and everything else coming out on that one. But you see, I mean, clearly on the shorter term, timeline here, you're seeing what? Higher highs, higher lows right now. Okay, so that is a clear uptrend on the short term. All right, so just keep that in mind. I think some people were picking out like 185, but that will put it through the 50. And if it gets through that 50, I mean, that's jet fuel for it. So just keep that in mind as well. Now, watch out for earnings for SOFI on Monday. And the reason why I say this tomorrow, because this thing usually of the last 3 earnings calls, I believe either the day of is going up 25% or within like a 3-day period has gone up 25%, and they're reporting on Monday. I talked about them probably, I think I talked to the members about them like a month ago about this, but that's going to be key. And it's got a lot of these trend lines to get through, a lot of resistance to get through. This thing has been a mess. It's been stuck in stage 1, just like all the rest of these fintechs. Fintechs, because their Fed funds rate and interest rates and everything has really affected fintech. Okay, but you can see the moves up after the last 3 earnings. Okay. And so you usually get, and even when it lost, I mean, you're going to have a big move normally either way on this one. One reason I think you're going to end up getting this probably is because the short interest on this thing. The last time I saw it, it was like almost 20%. And so I think that's why it ends up getting these moves and short start covering everything, just like you saw on Snap and all these others as well as Tesla and stuff. And so you get these explosive moves either way it goes. So just kind of keep that one on your radar. Now, a lot of earnings this week. All right, a couple of these will absolutely move the market. A lot of these have no weight in the market. All right, and so SOFI, On Semi, Domino's, Phillips, and you have Paramount, Transocean is going to come out, right? And then on Tuesday, a lot of popular ones: PayPal, Eli Lilly, 3M, McDonald's, Coca-Cola. And then one of the big ones, Amazon, another big one, AMD, another big one right here is going to be Supermicro, right? Starbucks, right? Riot, the cryptocurrency stock, or the crypto miner, excuse me. Pinterest, Caesars, Lemonade. Okay, let me get my breath. Wednesday, Pfizer, CVS Health, MasterCard, Norwegian Cruise Line, Wing, Kraft Heinz, Marriott. Then we got Qualcomm, Devon Energies, Paycom, Carvana, Fastly, Etsy. Then you go over to Thursday, and we're going to be sitting here and looking in the morning. I don't really see anything, but then after hours, the big one, you're going to end up with Apple. That's going to be a big one. Coinbase, Block, DraftKings, Cloudflare, Bill.com, Fortinet, Amgen, Bookings.com, Expedia. Whoo! Friday, Hershey's, Fubo, so some high flyers on that one. And then when you come to economic data, Monday, you don't have to worry about anything really at all. The news will start on Tuesday, as you can see. And so, you end up with some red book stuff, some housing stuff, S&P case, share home purchases, Chicago PMI. That's something the market will absolutely look at. CB consumer confidence, Dallas Fed Services Index, revenues. And then Wednesday, more fun. We got more mortgage data. Then you get ADP employment change, and then the Treasury refunding announcement. That's pre-market, whether we're doing the Treasuries or the longer dated bonds. Okay, a lot of manufacturing data is going to come out. Joel's job report is going to come out, and then we'll have some the Fed interest rate decision and the Fed press conference. Okay, we expect them to do nothing, but that's on Wednesday, so super volatile. Thursday, more jobless data, initial and continuous jobless claims, which hadn't been moving at all. Really not what they wanted to do. And then on Friday, that's when you're going to have unemployment, all that good stuff, okay? The average wages, all that stuff. And so they don't expect unemployment to move. They're projecting 3.8. Then you're going to have ISM Services Business Activity, S&P Global Services PMI, ISM Services PMI. And so you got a boatload of red folder news coming out next week that will cause volatility along with some of these earnings as well. And then you have the Fed presidents, that window they're in now, they're in the blackout window. That's why you hadn't heard their mouths yapping, right? But after the meeting, they can yap their mouths some more starting Thursday, okay? So get ready to hear them start to speak as well. We'll see what narrative Jerome Powell is going to say. I mean, the market's going to make what they want of it, but, they pretty much took the rate cuts out of this whole thing and pushed them always at the end of the year. But again, he's going to say hello, and you're going to get a huge spike in the candle which way or the other, and the initial direction is not the real direction, and it'll turn around, and it's always a fun day. So anyway, hope you guys got something out of it. Please hit that like and subscribe button, and I'll see you guys tomorrow.